You're up, Jasper.
Hello, everybody, to this week's Survive and Revive. Today's title is called Pivot Your Business. I just want to let everyone know that we still have time for the online convention, those last-minute CEUs. A lot of good information on that. Please ask questions today in the question and answer box. Click on that, ask away, and please fill out the surveys afterwards. We want to cover subjects that are important to you. We're doing this for you. And so if we're not covering a subject that you're interested in, please let us know and we'll take care of it. This week's is by John Meredith. So John Meredith, it's all yours. Take away.
Oh, thank you, Jasper. I really would just want to take a minute and thank you and Chuck and Megan and Russ and the staff, the board and the task force. You know, this has been a great group effort, and you guys help tee these up every week. And just on behalf of a grateful industry, I want to thank you all for all the great work that you've done. And I just want you to know that how much I appreciate all of you and the great work that you've done during these last couple months. So today for the question and answers, if you'll scroll over to the bottom of your Zoom window, you'll see in the middle section there's a Q&A bubble. So ask your questions in there. We'll kind of be paying attention to that today. The chat box, not so much, although you're certainly welcome to make a comment. But we'll be kind of paying attention to the question and answer box. So if you just type your questions as they come up. So today we're going to allow you to ask questions after each speaker. So so just make sure you ask lots of questions. We've got a great offering today, and I'm really excited about it. So just want to welcome you to how to grow your business and actually make a profit and what you should know to keep your business strong. We're really grateful that you took the time to be here today. The NCSG and the CSIA are both heavily invested in your success, and our goal is with these webinars is really just to help you climb out of this recession a little stronger. So I'm beginning to feel like there's a lot of energy in the marketplace, and I liken it to racehorses at the starting gate. You know, they're in a starting block and they're just clawing to get going, and when the gate fully opens, I hope that you can hold on, because I really feel that the second half of this year is going to be very strong. Hopefully you've taken the time to implement a lot of the things we've been talking about the last couple of weeks in these webinars, like zero contact service calls, virtual chimney assessments. Hopefully you've upgraded your websites and you're adding chat features, because all these things will help you build a bigger sales funnel and bring you back even stronger. So really excited about next week as well. We have a really strong offering, Recruiting and Hiring Demystified, where you'll learn the secrets of hiring and retaining great employees in tough times with Kent Wesley, who's the COO of Ashbusters in Nashville. Even if you've seen Kent's presentation before, he's really pivoted his process in the last couple months. So you'll gain a lot of great new insights on how to hire employees that will actually show up and work hard for your business. So after that, we're kind of pivoting a little bit after the 28th of May. So mark your calendars for June 11th at 4 o'clock and June 25th and July 9th. So next week, 4 o'clock is Hiring Demystified at Thursday at 4 o'clock. And then after that, we're going to switch to every other week. And we're going to be talking about culture. So after you've hired a great employee, you know, how do you keep them? Well, you keep them by having a great business. And part of that big piece of that puzzle is culture. So we're going to talk about how to use culture as a competitive weapon. And then we're going to talk about pricing, how to price your services for profit. Very important. We'll touch a little bit on that today at kind of a high level, but we're really going to get down into the weeds on the 11th and talk about how to price your services for profit. And then on July the 9th, we're going to be talking about how to scale your business, what you need to know as you grow. So if you're a one truck operation, you want to grow to 3, how do you do that? What do you need to know? If you're a 3 truck operator, you want to grow to 6. How do you do that? What do you need to know? If you're 6 trucks, you want to go to 12 or beyond. You know, all the things that you need to know as you grow from guys that have actually done it. So we're really excited about that. So today, I'm really excited about the panel. And so take lots of notes, ask lots of questions. I think you'll be I think you'll get a lot of valuable wisdom and insights. Our first panelist is Ray Palfy. Ray is the CFO for Ashbusters Chimney in Nashville. Ray has he's been a CFO for hire He's worked as a CPA for many years, and Ray has an MBA. He's worked with a lot of service companies of all sizes. He knows a ton about what it takes to run a profitable business. So, in fact, Mark Stoner, the owner of Ashbusters, attributes Ray for much of their success. So with that, Ray, if you would just wouldn't mind sharing your screen with us, and it's all yours, buddy. I think you're muted, Ray.
Okay, so everything I do is basically revolves around numbers. I'm always looking at numbers, making sure that we're getting the right amount of profit off of each job. In order to do that, basically, you got to make sure you're doing your accounting correctly. If you don't, you're not really going to get the true numbers. So the cash basis of accounting is pretty good. It's like a checkbook. When you receive cash, you're gonna put it in the bank, and when you pay for something, you're gonna record it when you put it in the bank. However, the method is really unreliable for financial reporting. Now, the accrual accounting is what I kind of look for, make sure we can get true numbers for our KPIs. Transactions and revenues are recorded when we earn, and expenses are recorded when we consume it. So what we're basically saying is, if you do a job in May and you have expenses in May, you're going to stick it in that month. You're not going to have it to where expenses are in May and your sales will be in June. You can imagine if you have a lot of jobs and you're constantly recording this in your system and you go to try to find out what's going on, you're not going to get a true picture of it. Companies should be data-driven in order to be successful. Companies that do not have good financial records will not be able to make good financial decisions. So basically, this goes over what I just said. Cash-based accounting is based on when the money changes hands, and that's how you record it. So I'm not going to go back over it, but maybe John can send this out to anybody who wants to use it to help themselves. Accrual basis is just what I said. You're going to record it when you earn it, revenue when you earn it, and you're going to expense it when you consume it. That way, you're getting true reading on your financials. Now, the next example, this is a good example. Jim completed a job in May. However, he received $5,000 payment for the job in June. Jim paid $500 in May for the materials to be completed. So if you look over to the left of the screen, you'll see the month May and June. Under the cash-based accounting, this could very well be the scenario where your expenses are recorded in May, because that's when you paid for it, and perhaps the customer didn't pay you for the job till June, so you're going to record it in June when you receive that money. Now, as you see, the net total looks like a loss for May for that job. In June, it looks like you made $5,000. On the other hand, if you look at the accrual basis of accounting, you have May, where you see everything is recorded in that month. You earned it in May, you used that up in May, so you get a net total and you're getting a true reading. So again, this is just one job. If you were to do this on a regular basis and you're on a cash basis in accounting in your QuickBooks or whatever, you're going to get not a true KPIs and what you're trying to look for. Gross profit margins is total revenue minus cost of goods equals your gross profit. Why is gross profit important to you? In short, the higher gross profit number, the more efficient the management is generating profit for each dollar of cost involved. How do you get a good gross profit margin? I use job cost, and I like to use it for by division. I also like to use it for individual jobs. So at Ashbusters, we can scroll down to any job that we've done at any given time and scroll down on it, and it will tell me how much it cost us, right down to the penny. So that gives me the ability to see on an individual job if something went wrong. And the same thing with divisions. You can also look at it by pick out divisions. And here's a good example of that. So this is job costing by division. Immediately when you set it up in your system, you can just pull your income statement and you can see where your gross profit is for each division. So if I was to take a quick glance, I immediately see the gas division and there's a little bit of a problem. So gas division's gross profit is way too low. Management needs to start looking at the jobs in the gas division. So once I realize gas division's low, I want to see what's going on. I can start pulling by job. Here is job 1. It's installed new gas stove for $1,000. Materials cost $550. Labor was $300. Well, it's gross profit's way too low by the time you add the admin and overhead. So you have to figure out what's going on. For me, it looks like material, the high ticket item, and the labor. You either going to have to reduce one of them costs, or you're going to have to raise the revenue to get where you need to be. So you can start picking out many different things and many different jobs and start seeing a pattern where you can adjust to get a higher gross profit.
Ray, I'm just curious, what do you see? Yeah, what do you see typically, you know, just looking around in Mark's business or maybe any business that you might be looking around in, what do you typically see as kind of the pain points? Is it usually they're just not incorporating, you know, all their costs? Or are they just leaving things out? Or are they, is it usually like, is there one or two things that you normally see are the problem? Is there a pattern?
Yeah, I think a lot of companies don't realize a high ticket item is involved versus like if you had a job with a lot of labor, you can charge more. There's somewhat, the material cost is a lot less. So for me, I'm looking at this and I'm like, the materials is a high ticket item. Either we're not gonna pay the labor 30% or we're gonna raise revenue up a little bit. But most of the times when I see it, especially in the gas division of a lot of companies, is because it's a high ticket item and they're not really seeing it. So, you know, with the labor and everything paid in, they don't have enough on it. So,
hey, Ray, can you speak up a little bit? I'm getting some feedback that some people are having trouble hearing you.
Okay, I apologize. I'll speak up a little bit. My room is echoing. It's my office. So I'll try to speak up. I just don't want to speak too loud where it's going to give an echo. But again, the material here is a high ticket item. You can't have it to where when you're done, charge it. In my opinion, either labor has to go down or revenue, but the most common thing that I see going on out in the field when I'm going out to companies is they're not realizing the high ticket item, the materials is so much. And that's the main thing that I'm seeing. And you know, you may not be able to get your costs down, so you got an option. You can either pay, you're gonna have to bring down labor, or you're gonna have to raise the revenue up a little bit.
Typically when you raise revenue, when you go into a business, you say, hey, raise your revenue, what happens? Do they lose work? Do they make more money? Or what do you typically see?
That's interesting that you said that. I got a slide coming up in a minute to talk about that. But you don't really have a choice. If you're at 15% here and your admin's at 20, right? You're gonna have to make a decision, either raise it or get cheaper labor. And sometimes you're not able to do that. You know, with all the work that's involved. Sometimes you are forced to raise it, but that's interesting because there's a way to determine when you're pricing yourself out. And that leads me to the next slide that I would like to talk about. What is net profit? It's total revenue minus total expenses. Why is net and profit important? You should know that and care about the net profit as it demonstrates the success of a business. In fact, net profit is far more significant in the figures of revenue, as there's no point in making a lot of sales that ultimately lead to that don't generate a profit. So how do you know that you're pricing yourself out in the market? How do you know that your prices are correct? That's a very good question. Well, now remember, I said you can do this by division, you can do it by job. So the next spot is right here. So let's go over net profit example. Company A has 15% net profit at $6 million in revenue. Company B has 8% net profit at $9 million in revenue. Well, let's take a look at that. If you were to raise prices and you lose $3 million in sales, you would think what? Most people would say, that's really bad. However, if you take a look at the numbers, at 6 million times 15%, net total profit is 900,000. Now you do $3 million more worth of work at 8%. Right? Now you got that liability of all that extra additional work, all that extra stuff you had to do, and your net total's $720,000. So company B did $3 million more in work for $180,000 less. If you were to raise the prices, you'd be in a better position. In 5 years, company A would have an additional $900,000 in net profit at the $6 million versus the $9 million. So the numbers are really important. If you know, a lot of times I go out to companies and they speak about their sales. That's the first thing when you walk in the door. Man, we're a $12 million company, you know, and then my immediate thing when I talk to people is, okay, so what's your net profit? Because that tells me a lot. So a lot of companies, you know, think 8% is good. I particularly like to keep my company at 15%, and we do rather well. Now, there's some things that we have to make adjustments on. That's why job costing is really important, because you can adjust to what you need, right? If you have a high ticket item, you got to move it up a little bit. You may not do as many gas stoves, but you're making money. So you have to pick them out. And sometimes, unfortunately, it's not the product to be doing. But most of the time, people are willing to pay. You may lose a little bit in sales, but you ultimately have to keep it at a certain price to keep the company going. The last thing I would say is I'm constantly looking at the budget. I do a rolling budget and an annual budget, and I like to make sure that we're comparing revenue and expenses versus the budget. And then I also like to have a break-even point. And to monitor that break-even point, if it's going up or down, and if it is going up or down with the break-even point, why? And try to keep everything as profitable as possible. Here, if you look at the screen, anything under the break-even point here is a loss. Obviously, everything over is a profit. Now, for every dollar, 8%, it takes 8% of that dollar to get you above the profit to start making money. So, if anybody has any questions, just let me know.
Yeah. So Ray, what kind of, if I don't have a good handle on my business, I don't have a good accounting system, I don't have a good job costing system, is there particular software that you like that you've seen companies be successful with?
The bigger companies, I like to see Sage 100, 200, even 300. QuickBooks is okay. You can have it set up by division. I mean, a lot of people think that it's hard to put job costing in place, and it is not. It takes a few clicks of the button. When they're recording the entries in for the expenses anyway, they can pick the division and just drop it into the job. It's a little bit more work, but QuickBooks will work until you get to be a little bit bigger company. Once you get over 10 million, you really need to start thinking about at least Sage 100.
Okay. So if you don't have a good accounting system, or maybe your general ledger isn't set up correctly, so you can't really track these things, where would you go to get help to do that?
You know, to be honest, I think you really need to contact a good CFO, somebody that is really good at setting up at least to show you how it needs to be done, the way you can get it done. A lot of people are very good at business and very successful. They don't really see the numbers. I mean, every financial tells a story, and it's up to a good CFO or a good accountant to be able to tell you the story of what's going on with your financials in order to fix it. Most of the time when I go out and I help people, they tell me, man, we really didn't feel the effect of paying you with the benefits of what we're receiving. But I think they really need someone to show them how to really set it up.
So is a CPA firm a good place to go? Because, would it be a good place to start for a reference?
It's very easy. You can Google either CPA or CFO. I like CFOs a little better than CPAs, and nothing against it. For me, CPAs are are great. I worked at a CPA firm for a long time, but the difference is one has a vision of the company, and I'm not saying all CPAs don't, but most of the time CFOs kind of know where you want to be, where you want to get. So you can contact a CPA firm and they will probably either have a CFO in-house, because I used to do that for the company I used to work for as going out helping people, or they will tell you someone you can.
So that would be a good resource to check with your CPA firm to see if they've got someone that can help you set up your general ledger and really start getting your numbers right.
Yeah,
Go ahead.
I'm sorry. I was going to say, John, the one I commented I see out there is sometimes people hire people to help them, and then they don't really know if they're doing a good job or not. Look at your net profit. See where you're going, if it's moving at all. If you're not getting any change, there's something wrong. Especially if you're under 5%, you can do better.
So what do you like to see for labor costs as a total percentage?
35% for labor costs.
Okay. And then and you said 15% net profit is your target. So that includes administrative fees. I mean, so
Yep.
in other words, you're adding 20% onto everything for the insurance, for the, and we're going to drill down into that more in a couple of weeks when we do pricing for profit. But just at a high level, this has been real helpful, Ray. It's kind of just see what kind of dashboards you're looking at. It's very helpful for people. So if you would stop sharing your screen, and then I'm going to introduce Bart Ogden. Bart is with Home Safe Chimney in Wichita, Kansas. Bart swept his first chimney in 1979, and he's been staving off bankruptcy ever since. Good job, Bart. Bart has learned how to keep his company profitable in good times and bad. He's very active in the Shriners Hospital for Children. And I'm pretty sure it's Bart's world, and we're all just passing through. So, Bart, with that, would you mind sharing a little bit about what your thoughts are on this topic? You're muted, buddy.
Yeah, I'm having just a little bit of difficulty here. Hold on just a second.
Yeah, you were up a minute ago.
Okay. Sorry, I'm getting an error on Zoom here. Just a second.
If you want, I think you sent me your PowerPoints. I can pull them up on my end.
Okay, now I've got it. You should see the purpose of business. Is it showing up on your end?
Yeah.
Okay, awesome. I'm not for sure. I've never seen that error before. Okay, so thanks to NCSG. Thanks for John Meredith, my friend since a long time ago, when he was getting ready to launch Chimney Saver, and we were involved in some beta testing down here and dealing with the roofing industry. So today I want to just look at this from a high level. And we're nothing special down here. It's just one of those deals to where I guess over time we've figured a few things out. And it comes back to start with, I guess, of the purpose of business. And, the purpose of business, if I can get her to go here. There we go. All right, so the purpose of business is to make money. All businesses were started for a purpose. Maybe you didn't like your boss. Maybe you had an entrepreneurial seizure. Maybe something else. Maybe you came out of college and decided to write a business plan and start some sort of business. Maybe it was a hearth business, a chimney business. I've been self-employed for so long that I don't know that I'm employable for somebody else. But that has definitely transitioned over time from 1979, when the majority of our business was sweeping chimneys, 3 to 4 to 5 slammers, pulling them every day, cleaning glaze out and throwing them back in the hole because frankly, we didn't know any better. You know, it's just changed over time. But the purpose of a business is to make money. The purpose of a business is to make money. The key word here is business. It's not a hobby. You want to ask yourself, would you do this if somebody wasn't paying you? And typically your answer is going to be, no, you wouldn't, because it's a business. So you just have to treat it like one. The purpose of a business is to make money. No matter if you're in a for-profit business or a non-profit or a not-for-profit industry, at the end of the day, you still got to have some beans in the jar there. The purpose of a business.
Beans in the jar, is that a Kansas term? Beans in the jar?
That is beans in the jar. Yeah, wheat in the elevator. Same type of deal.
Okay.
The purpose of a business is to make money. And it's not the only purpose. I actually changed this slide. I originally had the only purpose of a business is to make money, but I lightened that up a little bit. But I would still challenge anyone out there to show me that if you don't make money at the end of the day, what other thing is there to focus on? Because money is just going to be a tool. It allows you to do different things. So the purpose of a business is to make money. Nothing happens in business until somebody sells something. Peter Drucker, among others, said that, and I would add that nothing happens until someone sells something at a profit. You know, Ray went over that, and just knowing what your numbers are as far as profit goes. Because if you don't have a profit, you won't have a business for long. It's just that simple. So here we go to define it. And that really all comes down to why. Why are you doing what you're doing? Why are you putting yourself through the things you're putting yourself through? There's an old story about a guy watching a dog out in the high, tall grass in the yard. And you know, this dog is he's running to the right and he's jumping up and down. And then he runs over to the left and he jumps up and down. And then he gets low and he gets high. And then he jumps over here and then he runs around and around and around. And the guy's looking out there and he's thinking, well, that dog has just gone plumb crazy. There's something wrong with that dog. And you know, it's kind of like when people see us doing what we're doing. If you're the owner or the principal of a business, we do stuff that normal people won't do. Going back to the dog looked like he was crazy, looked like he was just out of his mind. But what we didn't see, or what the guy at the window didn't see, is the dog was chasing a rabbit in the grass. So the rabbit, think of that as your dream or your why, or why you're doing something. Because normal people don't do what business owners do. Most of us realize that, and we just have to understand that people see us differently, but that's why. So a starting point. A lot of times over the years, I've heard the term sales per opportunity. And that's great, nothing wrong with that. But, you know, keying off of what Ray said earlier, I would really look at profit per opportunity. You can do a lot of dollars in volume. And if you're not priced correctly and your margins aren't right, then you're not making any money. And frankly, if I'm not making any money doing something, I'd rather sit at home and drink a soda pop and not do anything and not make any money. It's the same deal, except I'm not risking my life and limb out there on a job site. Your cost per opportunity, you pretty much got to know that to figure out your profit per opportunity. All goes back to your numbers. You know, a cash basis versus accrual basis, just take a look at what's right for you and talk to your accounting firm. And at the very least, make sure as a business owner, you're dealing with an accounting firm. I still to this day hear of people dealing with the H&R Blocks of the world. that's fine. I can tell you a horror story at convention one of these days about my story of dealing with H&R Block back in the early 80s. It's not pretty. Margin versus markup. There's a huge difference in margin versus markup, and make sure that you understand that you know what the difference is. There's a book called Blueprint for Success. I'm almost positive it's out of print, but that was written in 2003 by the late Tom Pugh. But that book is still relevant. The last I knew, you could potentially still get that from the HPBA, but I'm not for sure if that's still available anymore. What he references in that book, and he co-authored that with a couple of other people, but he referenced A dealers or A tier dealers, kind of an A, B, and C type of deal with A at the top. And what their numbers consistently showed throughout the industry is that A dealers of hearth products were consistently 40% and higher on gross margin. So you have to know your markup to get that figured out. And I would ask you, whether you're running a single truck operation or a 20 truck operation or anything in between there, if you have loss leaders as a specialty business, why? You don't need loss leaders. And I still hear that occasionally. Well, we do this at a loss. And I would just say, stop it. Make sure that every part of your business is a profit center. And so you got to know your numbers to figure that out. Percentages, I would recommend, just my recommendation, that when you're dealing with your markups, say in QuickBooks or something, that you don't deal in just straight dollar markup. Deal with percentages as a whole. When it comes to the end of the month and you're dealing with getting your numbers right or figuring out what's wrong, it's very easy to look at percentages and make some adjustments on that. Again, it's amazing when we do some of these webinars that most of us are dealing with the same types of numbers. My next point on here in my notes is do job costing. Know what it really costs to do that job. Bundles, kits, and groups. We bundle everything up here so it's easier to estimate. Work with some other people in the industry that basically are firm believers that for most of the jobs we do, unless you're into some heavy construction and very complicated job, you should really be able to give a range of numbers in about 10 to 15 minutes on something when you're out on a job site. If you can't do that, you're costing yourself money. Direct labor costs to revenue. There's some various opinions on that as far as what that direct labor cost to revenue should be. I've heard some on the very low side and some that astound me. But my point with that is if you've ever heard a commercial or seen a truck, Ready Rooter, they advertise no overtime. That's because they're priced right. If you're priced right, your revenue over time will make up for overtime. You should be making enough on those and not having loss leaders to where those cover all your overtime costs. It really shouldn't be a big deal. Your biggest concern with overtime should be the effect on your team of wear and tear on them. So take a look, and when it gets to a certain point, then you should be able to know when it's time where you can bring another person on staff there. Waste. Waste reduction is the absolute easiest way to drive dollars to the bottom line. Take a serious look at your waste. And I can tell you that when we started taking a serious look at our waste, it was scary. And I can guarantee you that most people out there, there's a tremendous amount of waste. If you start tracking it, that you'll pay more attention to that and learn how to drive that to the bottom line. Seek professional help. If you don't have partners in your management team, you can hire fractional CFOs. You can partner with your accounting firm and deal with a CFO in there. There's a lot of ways to deal with that. But if you don't know your numbers, hire somebody to help you figure it out. It's worth their weight in gold. And the longest half foot, the longest 6 inches between you and change is the 6 inches between your ears. Think out of the box, get with some peer review groups, get with others, non-competitors in your industry where you can talk freely and figure out how to make it work, because there's always ways. But you just have to get past this 6 inches in most cases. Raise your prices. We're a specialty business. We provide a valuable service. Raise your prices. So a few references as far as reading materials. Dale Carnegie, How to Win Friends and Influence People. I'm a firm believer that you should read that book every year. And I can tell you, when I was in college, before I graduated, the first time I saw that book, I was absolutely offended at that title. That's been a long time ago, and I've seen the error of my ways there. Stephen Covey, The 7 Habits of Highly Successful People. Most of you guys and gals that know me know that one of my biggest things is start with the end in mind. Because if you don't have a goal out there, how are you going to know when you reach it? And how are you going to know how to get to it? Og Mandino, Anything by Og Mandino. Just a great author, usually short books written in parable style and just highly valued stuff, highly valued. Mark Horstman, 2011, I came across a website called manager-tools.com, manager-tools.com. About 2 years ago, a person in one of my peer review groups brought this website up again, and I thought, you know, that sounds like a really good deal. I went back to the website, logged in, and it said, "Hello, Bart." And I thought, oh, that's weird. Come to find out, I had run across that website in 2011, and for some reason it didn't just click. Over the past 2 years, I've really dug into that website, and it's made major changes here. Mark Horstman's one of the founders and principals of that. He just released a book called The Effective Manager. Typically, it's dealing with higher level corporate type businesses, but not only is that scalable up, but it's scalable down, and he's got solid principles in there. Before he released that book, he actually wrote The Effective Hiring Manager. And I can tell you that The Effective Hiring Manager changed the way we completely looked at hiring. That, as well as a person I owe a huge debt of gratitude to, who is Kent Wesley. That guy is a giver. If you've got questions, he can help you with that too. But those two books by Mark Horstman, they're worth their weight in gold. But I would urge you to read The Effective Manager before The Effective Hiring Manager, but buy both of them and read both of them. And there's the website, is managertools.com. $20 a month gets you access to over 1,000 podcasts, as well as the cliff notes for all those. They're worth their weight in gold, and I wouldn't give that up for anything. So that's basically what I have to present today at a high level, and just hope that somebody got something out of that, and I'd be glad to answer any questions.
So Bart, if you'd stop sharing your screen. I had a couple questions, and then there's another question for Ray, if you could unmute. Talk a little bit about job costing. How exactly do you job cost? Do you use a software package? Do you have some kind of sheet or form that you use? Talk a little bit more about that.
Okay, so I'm sorry, go ahead.
Did you say Ray? You want to talk to Ray, or?
Oh, I had a question for you, but yeah, this question is directed to Bart. I'm sorry. Yep.
I'm sorry.
Oh, okay, sorry about that. So the way we do it is we, out of QuickBooks, we basically print a behind the scenes sheet that is actually a load list, a work order sheet. When that loads out, then whoever the technician or crew is, they write down on that how much they took. When they come back in, they write down how much they returned, and they keep track of the labor hours on that. And that is a quick and dirty way to take care of that. Then when it comes in, I review that quickly. That goes over to bookkeeping. They run a couple numbers on that, and they let me know if we were within a certain percentage on that as far as our target rate. And if we weren't, then I meet with the technician or the crew leader that was on there to find out, okay, where did we drop the ball? Was it an estimating mistake, or was it a production issue, or what was going on? It's just, keep it very simple. The simpler you can keep it, the better off you're going to be, and make it simple for the people that are having to fill out the paperwork. That's the big thing.
So, and Ray, you can certainly chime in on that as well. That was a question for really anybody, but.
So what we do at Askbusters is when we run payroll, it's just as simple as when we cut the check to the guys, we link it to the job and what division, so payroll's in there. Anything that leaves our warehouse, we just put it into that job. And when we need to look at a job, we just pull that job down, and it has every bit of the information in QuickBooks already for us. And it also allows us to look at it by division. We have masonry, repairs, and so on. So we're able to look at that division if something's going wrong and drill down on that job from the gas division.
Nice. And then I had a question from Ray. When you say you're looking for a 35% labor cost, is that for gross revenue, and is that including it?
No, that's for the cost of goods, but that's also including I guess the sales guys also. What we have there at Askbusters is 30% is what our commission rate is right now for everybody, and that's including sales.
Okay, but that does not include any admin costs.
No, it doesn't. No.
Okay, so when you said 35% labor cost, that's just for the labor without admin costs.
Now, keep in mind, it's different. If you have a high ticket item, you can't pay as much. So that's why the job cost is really important to look at also. We have commission rates lower. It's just according to what they're doing out there in the field will determine how much we're able to pay to them. So that's just what we do. So if you're putting in a high ticket item like a stove, it's considerably less than it would be.
Okay.
If you're out there doing masonry work.
All right, perfect. Thank you. Stay tuned, guys.
Can I tag onto that for just a second, John?
Yeah, absolutely.
So Ray makes a fantastic point there that I think we really need to make sure that everybody's clear on. You can sell a lot of high dollar stuff. For example, in our showroom, we deal with some very high-end fireplaces, and you have to understand that when one of those pops on a commercial job, that's going to skew your numbers. So you have to, when you're looking at your books and your job costing over time, you're going to have some anomalies, and you might have to kind of wash some of that out to realize that, hey, that's not going to come along all the time. You can sell very few units that are really high dollar and not make near as much money, even though your gross shows off the charts. So I just wanted to reinforce that, and Ray had a fantastic point with that.
Okay, great. Well, with that, I wanted to bring up our next speaker, and then you guys stay tuned here because we'll certainly be asking you some more questions. So let's see. Let me share my screen, and I'll bring up some slides here I want to share with you. So the next speaker is Chuck Roydhouse. He's a graduate of Shepherd University. He's got a degree in fire science and safety. He manages his chimney company is Clean Sweeps of Anne Arundel County. He's been in the chimney business for 27 years. He's also president of the Roydhouse Effect. And Mark Stoner kind of jokingly wrote a tagline for him, and the tagline was "Stay out of the poorhouse and call Roydhouse." He is also president of the Roydhouse Effect, and he offers fractional CEO, CFO consulting. It specializes really in making businesses profitable. So I can tell you from my experience, Chuck is probably one of the better business operators, if not the best in this industry I've ever seen. He's also been on the board of directors for the CSIA since 2014, and he's currently the president. So Chuck, thank you for your leadership, and I look forward to what you have to share with us today.
Well, thank you, John, and thank you for having me. Some of the things I'm going to touch on, we've heard a little bit. Hopefully this will be a little bit different, and it'll maybe stick in a different way of seeing it. One of the first things that I believe in as the leader of your company is you have to have discipline. And with discipline comes personal accountability, and that's in everything that you do, whether it's money management, It's how you present yourself. You need to think of yourself as a Marine, and the Marines are always the first one in and the last one out. So if you're going to be the one as the active manager of your business, and in most of the size of the operations that we have in our chimney industry, usually the owner of the company is the guy who's managing the day-to-day operations. Until you get very larger, that you start to have upper division managers that can do things for you, you're going to have to do these things yourself. So you're going to want to lead by example. So what does that mean? Well, if everybody comes to work at 8 o'clock, you should be at work at 7:30. You should be doing whatever prep work you need to do to review what's going to go on that day. So when the guys come in, they see you're there. And that gives them a peace of mind of knowing, okay, we're ready to go. Our team leader, our coach is here. So when you give out, the orders, your SOPs that everybody knows about, you want to make sure that they're followed through, and you need to inspect that the jobs are completed. So what that means is not the literal job itself of necessarily going on and checking behind people, sweeping chimneys to make sure they did a good job. Of course, you should do that as quality control or have a manager do that from time to time. I'm talking about if you put out an edict. For example, today, this morning, I was updating SOPs on respirators, and we hadn't done that in about 3 years. So when I was looking at it, and I had made some changes to add in for some of the COVID-19 and sanitary practices to be part of this SOP, to go hand in hand with the other ones, I realize this is another thing that not only do we need to train our people, but we need to follow through. So this following through becomes a habit for you. And that's what you're going to do with your pricing and making sure you're watching your numbers. So when you develop good habits about being upbeat, being in uniform, showing up in your vehicle is reasonably clean inside and out, then it's easier to hold your crew accountable for what you want to have done. And that goes through with every aspect of the business we would be doing. But today we're talking about numbers and how to be profitable. So it is all part of the ingredients of what you need to do to be a successful leader and to be profitable is how you present yourself. If you see someone in the military, fire service, police department, they always look good in their uniform, and it's part of a mindset. And that mindset leads to the discipline of watching and being responsible for everything that you do. So that dovetails into training and education, and that has to be continuous, and you need to reinforce it. You can't do a one and done in your training. Now, we could talk about all kinds of training. We could talk about business training, technical training, going over SOPs, but all of those things are part of the recipe of making sure that people understand how your business works and why it's important for them to be on work at time. The very first thing that I do when I meet with a prospective client is I ask them, do you know what you need to charge per hour to be profitable? A lot of people don't know that, or they just pull a number out of thin air. And I can usually tell that they don't have any statistics to back that up or data. And that's okay. That's usually what I'm there to help them with. But to give you an idea, if you have a two-man crew and two guys across the United States, we'll just say cost you $300 an hour for two guys to work, is not unreasonable. Well, that works out to $5 a minute. So if you have somebody who's 10 minutes late every day, that's costing you $50 a day of lost production time. When you start thinking of your business, of what it's costing you to do things per minute, you'll really get hit between the eyes of what happens when somebody's late, or what happens if you don't route your trucks correctly and you have people jumping from job to job all over the county mismatched. So it's about being efficient. You need to reinforce why you're doing this. In today's age, everybody wants to know why. I come from a different era and I come from a different background. When I grew up, I went into a paramilitary organization. Coming out of the Boy Scouts, I went right into the fire service at the age of 20. And that is just like being in the military, and you have all different ranks. And when you get an order, unless it's going to be something that the boss didn't see that is going to hurt somebody or put you in danger, you follow that order through. Well, in a service business and with generational changes, people want to know the why. So when you're dealing with money, they need to know why you need to drive at certain speed limits. Not only is it safe and what it costs if you have an accident and you take that truck off the road, what is that going to do to your crew? Do you have a reserve truck for them to go into? If you don't, they go home and they don't get paid. What does that do to your bottom line? So some of this information has to be shared so they have an understanding of why we need to not have waste, why we need to be profitable. And again, then you need to re-inspect. You need to get out in the field and you need to see, are they following your SOPs? Your SOPs should be written in a way that everything is flowing. And I equate it to working like a ballet, where you're constantly practicing on what you're going to do from the minute that you roll up on the job site. How quickly are you exiting the truck? Are you taking things to the door so you're making less trips? How are you greeting the people? Is it consistent? Are the trucks laid out so people aren't searching for tools? All this cuts in your waste of time. Bart was mentioning waste. There's waste of materials and there's waste of time. And I would argue that time is the most costly material that you're wasting. And then you have to have accountability. So whoever is checking on this, if it's the team leader, the company boss, the owner, or you have a manager, you are a big enough company where you have a field supervisor, whoever's doing that needs to be held accountable that he's doing it. And that's your job as the business owner. And then he needs to hold the employees accountable to make sure that they're following the program and the protocols that you've set in place to eliminate waste. And then I'll go to the next slide. All right, John, can you move the next slide?
Hold on a minute. We're having some technical difficulties here.
That's okay. I understand. It's going through China.
Okay, you should be up and running.
Okay, I got it. Well, that gives you a little bit of pause because I talk nonstop. I
Wait a
apologize.
minute. I just hit share. Okay. Hold on a minute. Okay, we should be good.
Okay, we're good. So hopefully you all can see this. So size. What Bart was talking about is crucial. Bigger is not always better, whether you're talking about the size of your company or your sales. So a large company does not mean you bring in more money. You want to remember that the top line is always vanity. Guys want to brag about, oh, I got 20 trucks and I do, $7 million in sales. They could be going broke. All the trucks could be financed and the repo man's right around the corner ready to take them. So the bottom line is sanity. That's your net profit. And that's all you need to focus on. You don't need to do every job. You just need to be profitable on every job you do. And cash is always king. So the top line is vanity, the bottom line is sanity, and cash is king, baby. That's all you need to know. So you want to build bridges and not burn them. You always want to take the high road and maintain solid relationships. So that's going to be relationships with your employees. It's going to be with your vendors, and it's going to be with whoever your team is. So if you have outside consultants helping you, if you have a fractional CEO or a CFO, you want to make sure that you all are singing from the same hymnal. And sometimes there's going to be rough spots. You don't want to be an adversary to any of these people. Everybody should be working together to row in the same direction. And that's going to give you continuity of command. Continuity of command gives a real good presence. It gives confidence in the employees, and it creates a culture where people want to come into work. And when people want to come to work and be happy, they're going to be more productive. More productive means you make more money and you have less wasted time. You don't have all the gossip going on in the background or disgruntled people. You also don't need to feel the need to offer every service. You want to find your niche and you want to own it. You know, there might be something that you just can't do. Maybe gas isn't your forte, and maybe gas is something that is, over marketed in your area, that if you jumped in, you'd just be one more guy doing it. But maybe factory built swap outs is something that's a high revenue stream. Focus on that as an example. Get the team that can come and put factory built fireplaces in and make that your niche and get a name for that. And that is what is going to be kind of the recipe for what makes you different from everybody else. You know, don't be like every other plumber. You know, we are in a unique business providing a unique service, and you need to charge for it. Okay? So what financial controls do you need to know? Well, you need to know your total labor hours. You have to know your total labor costs. And then Lindemann came up with a thing called sales per opportunity. And I thought I was the only one who came up with profit per opportunity, but evidently my buddy Bart thinks just like me, so good on you. That's what I've always focused on. Lindemann was correct. You want to take every advantage of getting in front of whoever you can to make a sale. But realistically, it's all about the ones you really bring home. It's not about pulling up the net full of fish and all the fish that got dropped or fell out. It's the fish that you land in the boat that count, and that's how you eat. So you want to know what your direct costs are. Your direct cost is going to be your labor, your materials, your payroll, and your workers' comp. Indirect costs are going to be overhead, your vehicles, your insurance, and your marketing. The reason you need to know all of these things is because it's like baking a cake. These are all very important ingredients, and leaving one out can make the cake not rise. And that can be very embarrassing if, you know, you're cooking a cake for somebody and all of a sudden it doesn't rise and it looks like a brownie. You're going to have egg on your face. Well, the egg on your face at the end of the year is you don't have any money. Recently, I heard a presenter talking about how he had, a $3 million a year company, and at the end of the year, he owed $180,000. So he was really in the hole. So he had to check his numbers. He figured out what he was doing and got back on the track. So he's in good shape now. But don't be that guy. Understand what it costs you to be in business, and that is also what you're going to plan for your future. We are in an industry that has a lot of graybeards, and I hope people have been planning for retirement, either making investments, buying real estate, or doing whatever they needed to do, 401k, simple plans. All those things are part of your cost of doing business above your rent and the labor and all that type of thing. So you need to account for all of that, okay? So how do I accomplish this? You need to know and measure your gross profit margin, and that is your sales minus your direct and indirect costs. You need to track and measure your revenue per employee. That's a key performance indicator. You want to measure and track efficiency of hours budgeted. So each job should be costed out to where you know a task is going to take you a certain amount of time. I encourage you to have your guys work on this with you. We have a cheat sheet in my chimney business of, on a typical job, we'll say it's a typical 20-foot run, 13 by 13 terracotta flue tile. We're going to do a heat shield lining system and a smoke chamber, and that's going to be X amount of hours on your typical job. We're not counting in for man lifts or scaffolding. We're talking about a cookie cutter, 1,800 square foot, split foyer or a large rancher. You all agree right from the get-go that this is going to be so many hours, and then you add in anything that's outside of that. Well, that gives you an idea of how to mark and scale what you're doing. You want to measure your cash flow, and that's what's left after all commitments are made. And that should be your cost of goods sold, which should be way less than 60%. If it's more, you're undercharging or you're overpaying for your goods. And then accounts receivable. I ask this every time I speak. Why would anybody have those? If you understood what it cost you, as I said at the very beginning, per minute to operate, even for an office staff person to have to hound, send out another bill, it just increases your costs. Everybody today has a credit card, even kids. So collect the information. Make sure it's understood when you schedule the job or book the appointment. We get paid time of service. We accept all form of payments. List all your credit cards, offer financing. Most of these chimney jobs are running anywhere from $7,000 to $15,000 in this day and age. And because of that, that's not something everybody wants to pull out of their pocket. So get with a finance company, get 0%, no payments for 12 months. That's very lucrative right now. People are jumping on it because they're worried about, spending the cash they have saved while, everything's going on in these challenging times. Don't be a shrinking violet. Be aggressive as far as your maneuvering. Be friendly, be empathetic when you're talking to the client and solve their problems. By doing that, the money just pours in. And I'll leave you with this, some advice from the bison. So my logo for my consulting company is a bison, because a very smart guy who I really respect, Mark Stoner, told me a story about the American bison. Well, one, the fact that it's American really appealed to me. The other was that a bison is the only animal that when a storm comes, he turns and runs into it, because they figured out that if they run through the storm, they get through it quickly as opposed to trying to run away from it. Well, that appealed to me because I was a career firefighter for 25 years. And when everybody ran out of a burning building, it was my job to go in. So a bison, he says, always stand your ground, have a tough hide. You want to always keep moving. You want to cherish your wide open spaces. You want to have a strong spirit, and you want to roam wild and free. And then you just let the chips fall where they may. So that's all I've got for you today. If you have any questions, feel free to reach out to me, and I'll take anything that John might have right now.
Thank you, Chuck. I just want to, just curious, when you go to businesses and you look, what's the one thing that the biggest mistake that all the businesses that you go and try to help, what's the biggest mistake, what's the single biggest mistake that they're making that you see most often?
None of them understand their numbers and what it costs them to truly operate per hour. Most people go into business by going, and I'll use some of these real antiquated, accurate examples. You go to the Yellow Pages and you call up, 10 chimney sweep companies, and you ask them how much it costs for a chimney cleaning. And one guy's $59, one guy's $89, another $69, and you're like, okay, I'll come right in the middle at $63. The joke is all those other guys are probably going broke because nobody told them how to do things either. The biggest problem with the service industry is we all came into this as technicians and not as business owners. So we don't have the mindset. We want to be real good craftsmen, and there's nothing wrong with that. And that transpires over to a physician is the best example. You go to, 12, 14 years of school to be a brain surgeon or a heart surgeon, and you could be the most skilled guy there is. And then when you come out, all of a sudden you've got to know how to do billing for all these different insurance companies. And that's not what you went to college for. You went there to open somebody's chest or cut their head open to fix them. So you have to hire people that can do that. So that's what everybody in a service business needs to understand, is they need to get somebody in there if they don't know how to do it themselves and don't have the time to do the research to learn it on their own. They need to get somebody in there to get them set up and help them with it. And once you identify what that cost is per minute, per hour, then that'll get you on the road to financial success.
Thank you, Chuck. Just we'll close out now, but I just want to imagine yourself a year from now, after you've kind of implemented what we've learned today and some of the things we learned really in the last few months. what does your life look like? Let's say you've got your arms around your numbers, you're doing some of the things we've talked about in some of these calls. What does your revenue look like? But more importantly, what does your profit look like? So I promise you that if you follow the advice from just this webinar, you'll see results. So find someone to help you. When we reach out to Chuck or Bart or Ray, they've all would be really honored to have you discuss with them. You know, these are the things you learn in school. There's not a class that I saw in high school or college on how to be a successful business owner. And so these things you have to either learn through experience or you learn by finding guys that are ahead of you that have mastered these things. And they can be the ones that really lead you through the things that you don't know. So I'd encourage you, like Bart said, you know, find a mixed group. Find a mentor, find somebody to help you with these things. You know, these things aren't really taught in school. And if you don't have a friend, relative, neighbor that's willing to share with you, you know, find someone who is. Anytime I've always wanted to do something in life, I've always tried to find someone who's a little farther ahead of me that can show, you know, that I could learn from their experience and their mistakes. So I wouldn't have to make them all myself. So reach out to Bart or Ray or Chuck. They can be a great resource to help you be a more profitable business. And again, we are so honored that you spent time with us today. We hope you found value in this. And Chuck, would you just close us out, please?
Thank you, John. So a big thank you to Ray and Bart. You really provided some good information for people in our industry. We all need it. It's good professional advice. And a huge thank you to John Meredith of Saver Systems again for doing an excellent job helping us host this and put it together. Can't say how much we appreciate that from CSIA and the National Chimney Sweep Guild. And thank all of you for joining us each week. It's very important that we can help our industry. You know, together we are stronger. So the National Chimney Sweep Guild and the Chimney Safety Institute of America are going to continue to do these webinars because we believe as an association that, you know, our members and our credential holders need our help, and we're here to support you. And we want to provide timely content to you that's going to be relevant for what's going on right now. So what I want to leave you with is, you know, all of these webinars are on the NCSG and the CSIA Facebook page. So if you missed one, you got in late, whether it was today or a couple of weeks ago, you can go back and you can replay them. Sometimes you don't hear everything the first time. I know sometimes when I speak, I talk very, very fast. So I encourage you to go to our Facebook pages and re-listen to them, revisit. Next week's topic at 4 p.m. Thursday Eastern Standard Time is going to be recruiting, hiring, and demystifying. And this is going to be the secrets of hiring and retaining great employees in these tough economic times. At the end of this webinar, you're going to be emailed a survey. Please look at it, fill it out, and send it back. We really read those, and I go through them line by line and look at exactly what everybody's asking to see and how you're grading us so we know we're presenting timely content to you. We want to be relevant and provide value for you. I want you to remember that CSIA and NCSG, we're in this together. We're here for you. And as I tell you every week, you ain't heavy. You're our brother and you're our sister. So thank you very much, and we'll see you next week. Be safe.